Hi, this is Jay Lakhani from BindleFX. Welcome to this video tutorial on basics of technical analysis. When we want to make investment decisions, often there are two routes we can take. Firstly, it's the fundamental analysis, and secondly, it's the technical analysis. Fundamental analysis involves in analyzing the value of the company. It looks at the background of the company, the characteristics. It analyzes the past data such as profit, the turnover, looks at the directors' reports, looks at the forecast, management reports to see what the prospects are for future. Technical analysis is completely different. It doesn't put any emphasis on the valuation of the company. It is not interested at all. Not at all. What technical analysis is interested is the price action. What is happening to the price? Of course, you will have many instances where the fundamental analysis does not justify a price movement. And a classic example could be during the dot-com boom. You had many companies with absolutely no balance sheet value, yet the valuation was in billions. So that is what technical analysis is looking, i.e. the movement of the price. Secondly, what it is trying to analyze is the supply and demand of that particular security or commodity. Because at the end of the day, the price action is dependent on the demand. So if more people want to buy that stock will go up. And if they decide not to buy and instead sell, then the supply will exceed, which will result in the movement of the price going down. Also, what technical analysis does, it enables one to determine the trend and the momentum of the price action. I have often mentioned that success in trading is dependent on your emotions, on your mental fitness. And often through technical analysis you can measure the emotions of the market players. The fear comes into play, the greed comes into play, the panic comes into play. Now this is a good example here of a basic chart. Now it may look complex initially, but as you get used to it, you'll begin to love. Right at the bottom, what you have are some indicators. For example, this is a MACD and this is the RSI. Again, I have got various video tutorials which looks at into number of indicators. But let's just look at this chart in a very simplified format. What you have here, that is the movement of the price here. Okay? Where my pointer is, as you can see, the price going up and down and goes up again and down and up and so on. So up here, this is the movement of the price. Also on the chart I have got some moving averages, right? For example, these thick lines are moving averages. Again, what moving averages will help you is to determine how powerful a trend may be. Okay, so in this particular case, what you're really seeing is price comes down, goes back up again, and it founds resistance, i.e. it fails to get past decisively this basket of moving averages, and then subsequently it collapses, and this is a trend line which is a support